We're recording. All right, guys. So real quick, let me just do a quick recap. All right. So we're basically looking at entries in terms of utilizing imbalance. All right, and what areas of imbalance that you want to, what areas of imbalance you want to utilize, as price is moving. All right. So basically, we said that we're looking for two things. Number one, you're looking for a break of structure or a change of character. So we need to see price break structure here or give us a change of character, right? When the imbalance is formed. And then two, right? Let's say, for example, we have two areas of imbalance as price pushed up. We want to look at the imbalance that's within the discounted price if we are buying, and if we are selling, we want to look for the imbalance that's in the premium prices. Right. So how are we going to identify that or help identify that is by utilizing the Fibonacci retracement tool. If we are buying, we go from low to high. If we are selling, we go from high to low. All right. So basically, all we want to see is how much of this move up is price going to retrace. All right. That's what it's called, a Fibonacci retracement tool. We're measuring how deep price can retrace, right? So let's say like this, for example, anything that is below, all right? Anything that is below, so we're going to use this here as example. Anything here that is below the 50%. So you see that 50% number here that I have, just think so you can see the 50% right here. That is 50% of this move up. So basically what this is saying is that we're looking for that is price coming back down 50% of this move upward. Everybody got that, right? I think everybody should understand pips, right? Just make it short. Everybody got that? So this represents 100% of the move. Back down here represents 50% of the move. If price is above 50%, perfect. If price is above this 50%, this, all right, up here, all right, is definitely not our discounted zone. Okay, this is premium prices. We're not trying to buy in premium prices. Okay, we're not trying to buy in premium prices. Remember, we are only selling in premium prices. So up here, we put in that part red because that is premium prices for the buys. And down here now, anything below 50% is then seen to be, all right, is then seen to be discounted prices. All right, so we're gonna put that green. Actually, let's put that blue. All right, down here now, this is our discounted prices, and this is the area we want to buy in. So, all right, so here is 50%. So I'm gonna just put a line just to show that. All right, that's 50%. And we know that everything else under is basically, discounted prices. Yeah. So, oh Lord. Oh. All right, so we can just remove the fib for now. So then if we look at it and we see, all right, there's two areas of imbalance here in our premium price and here in our discounted prices. Which one are we looking at? Which one are we looking at? That's a question, guys. That's a question. All right. So we're looking at discounted prices, right? So we want to see price trade into this particular area. This is the imbalance that we're going to pay attention to, right? Yeah, this is the imbalance that we're going to pay attention to. All right, so this is how we want to, take a look at the imbalance and so forth that is created. All right. Now, every time, of course, every time price goes ahead and breaks a high, all right, then we could then pay attention to the imbalance that may be created, in that particular break. So if we see like this, let's say this happens, and that price goes ahead and creates another break of structure, right? Although we may have, so that here may become just show this, right? So right here, this is another break of structure, of course, right? So we got a break of structure here. Boom, my price came up, pull back down, I pushed again. All right. So in this particular move, right, I'm gonna shift this now just so that you understand what I'm saying. All right. In this particular move up here, of course, more likely than not, we have imbalance in this move up. All right. A price came down, pushed higher again. It is definitely very possible, all right, based on how strong the trend is, that price could just, fill back in the imbalance that might have been created in this push up here, right? Something like this, and continue to go higher, right? That is very possible, right? Now, it wouldn't be unlikely that something like this could occur, whereas, we may have imbalance down here, and, like price may, although pushing higher, may come back, revisit this, and then go higher. All right, it's not unlikely. Okay, so always remember trading is probabilities. Right, I always re-emphasize that trading is always probabilities. So like no strategy is foolproof. Right, no strategy is foolproof. Right, what I will say is, hold 1 second, guys. Right. What I will say is that there are some things that make the strategy more likely or more probable, right? And that's where we get into like the additional confirmations and so forth, right? But today we're just gonna look at imbalance, okay? So everybody understand this so far? Like just what I went through, in terms of just buying in discounted prices and selling in premium prices. So we would basically just identify the imbalance in those discounted or premium prices. Okay, good stuff. All right. All right, so let's do an example of it. So I'm clear this. We're gonna do an example, like literally just based on what it is that we have on the chart, right? So we just identifying imbalance, right? So what you would do, right, in a case like this is you're looking for the imbalance that is created. So in a case like this, we don't necessarily have any imbalance created here. Like price basically traded evenly and went up. Right now here we got a gap. Okay, so like we could call that imbalance. Okay, we definitely got a gap here, so we could call that imbalance. Okay, so we're gonna just follow this chart for a little bit, just give multiple examples of it, and we just see how things play out, where we would have put potential entries and so on and so forth. Okay, so in a case like this, an entry will be somewhere in here for sure. All right, we got all this this gap left here, this this imbalance in the market, so we'll be looking for entries somewhere along this area. Right, this was our breaks of or rather change of character. So we had price give us a change of character here, boom. But we basically left no imbalance. Price traded, very decently going up. All right, we got all these wicks, boom, 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 and yeah. So we don't really got a reason to come back down. All right. So let's see how it goes, and we take okay. So like here, for example. All right. So if price, no, this is, so I'm just pausing at different points. We got price boom trading to the imbalance that was here. If price goes ahead and breaks this area, all right, then we'll be looking at any imbalance that's created here. Okay. If price does not and trades further down, then, that's no problem. All right. But we know that ideally we're looking for entries within this area here of imbalance. All right. All right. Boom. Price goes ahead and breaks the high. Okay, so once again, we went ahead, we created a higher height, so we're constructive. All right, I'm just gonna mark out those areas just with the green line. Okay, so we got price, structure. So we're doing the same thing again, no. All right, we identify now areas of imbalance. Okay, so we have like our last sell, all right, and here, so we look at where the market has not basically been balanced, and we could literally take that from here. That's our, all this is imbalance right now. Of course, guys, so I'm just showing you from a higher time frame perspective, right? Of course, if you want to, like get very specific with the entries, then you drop the time frame. Okay, I'm just showing you from a 1 hour time frame, and you can write this down. Whatever time frame you do an analysis on, you want to enter 2 time frames lower. So, for example, it'll be 1 hour. Most people don't have 45-minute in, so it's 1 hour, 30-minute, 15-minute. Okay, so you'll be looking at an entry, right? You'll be looking at an entry 2 time frames lower. It should be on the 15-minute time frame. 1 second, guys. The rain is falling. Oh, nice, isn't it? All right. Yeah. So you'll be looking at your entries on that 15 that 15 minutes on the hour, right? So 30-minute, actually 5 minute, all right? You'll be looking at something like about 15 to the 5-minute time frame, right? You'll be looking at. All right. If you're on the 4 hour time frame, you'll be looking at, 1 hour, 30-minute. So 30-minute to 15-minute time frame. That's your time frames that you're looking at for entries. Okay. Then the lower you go, if you're looking, for example, on the 15-minute time frame, you're looking at like 5 minutes to 1 minute. Okay. Entries. All right. Sorry, buddy. Following so far? Buddy good? All right, we're gonna just go through it now and just see, because the more you see it, the more it's gonna click, the more you see different scenarios of it. This is how I back test. All right. So anytime I am, like just refining my entries and so forth, this is how I back test everything. Okay. So I go through, click now replay tool, mark it out, and just do it as many times as possible. Why? Because what you're doing now is that you're creating entries. It's like if you're entering the market, like over and over and over and over and over again, but in a short space of time. So you have, multiple entries being created. Okay. So let's see. There we go. Boom. So we got this, for example, price traded down. All right, into our imbalance. Bam. And there we go again. All right. You guys seeing this? I want you to see it, follow it, see what's going on. All right. So we got boom, price traded right down. Right. And as your money will start to click, you can see the order block and so forth here as well. Right. So we got multiple like confluence. We got multiple confirmations. We got liquidity being created here. Bam, bam. Price came, created a double bottom, swept it. Like we got a lot of things that we could start to see as we go through. Okay. But I just want you to just see the imbalance right now, but let your mind still go on the things that you know. Oh, that sounds cool. Let your mind go on the things that you know, all right? So let's look at it again. So again, we brought structure here. All right. So literally we would have got 2 entries in the market. Bam, 1, bam, 2. Right. That's number 2. All right. We brought structure at this point. Boom. And we got imbalance left in the market. All right. Great. So we look at it here. Boom. Here. All right. See here is one area of imbalance. 2, we could also do here as well as another area of imbalance. All right. We could just do it to this area because that would be all the way up here, would be the entire area. All right, really and truly. I mean, we could do that. Let's just do that. All right, that'll be the entire area. All right. So once again, do the same thing. All right, let's go. Of course, already top it. All right, came back there. Boom. And just about the area we missed. All right, slightly. All right. But you guys see how, again, the market is always attracted to these areas of imbalance. All right. You see what's going on? All right. Just let me know that y'all are following what I am saying. All right. Let me see. Chat. Okay, good. All right. So we're gonna go over, we're gonna continue. Just continue to go through it. All right. So same thing happens. All right. So we got price once again. Price structure. Bam. All right. Price growth structure. Let's come back here. All right. I want to get. All right. Cool. So we're looking for areas of imbalance once again. All right. So here, this is where price broke structure on this move. Boom. The movement up. This was imbalance created here. All right. Then we had imbalance here again. All right. But if you realize, and this is where I want your mind to go. We have price push up, pull back, and then we have another break of structure here. See that? All right, here. We have another break of structure right here. Price push up here. This was the high. All right, if you go on a small time frame, you see that this was the high. Of course, price pull back here, and then bam, we broke it again. All right, so remember, when we break that high again, all right, we gotta look for imbalance now, like higher up here, because this created a break of structure. All right, so we want to look for that move that creates a break of structure. Okay, so like here now to here, this would be an area of imbalance. All right, so here's your thought process. Price more than likely will not come back into this area here, more likely than not, or at least not no, rather. All right, because the trend basically is pretty strong. All right, we had price push up, so this was the push up here. That was the pullback. All right, small, and then price ran again, but it's running pretty strong again. All right. So despite we got like imbalance and so forth being created down here, price probably may not come back down there. Like, no. Okay. So we got here is another break of structure. We look for the imbalance in this break of structure here. And we see price already looking to come back down. Right. So probably at best, we may get like maybe an entry in this order block right here. Right. So we may probably see something looking like, price coming down into like that area and then buying again. So if this was your imbalance, price trading into here, your stop loss, of course, will probably be below that low right here. All right. So price breaks there, then we're gonna come back down into this area. Okay. So the candles are expected to trade to the top or bottom of the rectangle. Yeah, correct. That's the area of imbalance. All right. So you may get price may just trade or tap into, right, might just tap into like that imbalance, because that area is going to attract price, right? So you might get price just tapping here, or you might get price tap right through it, right, and goes to the bottom of it, right? So for example, like this, if you are trading this, your stop loss, you could drop your stop loss, for example, like here. All right, you could drop your stop loss here, or for safety, right? For safety, just below that. All right. In this case, again, if you were entering here or down here, this would be your stop, would be right below there. All right. And so on and so forth. So that would be the perspective, is to take your stop below the actual, still below the low, because if price breaks are low, then we definitely ain't looking to continue up. Right. All right, so let me see how this one goes. All right. All right. So literally, like what we said, price traded right into it, right? Right into this area here. Boom. Didn't go below it, so you would still be good on this trade. And then price pushed back up. All right. Here we did not get a break. All right, as yet. So Yeah, we would. So let's say you were still in this trade, you just keep it. All right, now we got the break. All right, now we got the break. You guys see what's going on here? Like it feeling easier to understand now. Like as we go through it, you just do it multiple times. So then you do the same thing again. Look for the area imbalance, right? What was the area imbalance here? Bam, bam. Right, this was our break of structure. Boom, first boom structure. All right, and push it up. All right. Now this is our area of imbalance here. So we personally, again, we would look for lower time frame entries. So what we could do afterwards, like we could just tap back into these different areas on a lower time frame and see like where we could have entered like lower so that our stop losses are not crazy. Right? So our stop losses are not crazy because something like that has like 100 or something plus pips, right? But you see, okay, this is the area that we're looking at, all right? Because we only got one area here of imbalance. Small time frame, we're gonna see more areas, that we could trade into. Okay, so we got this, so we already see price again took the high. All right, so that was literally top of it, took the high, but we still got like a lot of imbalance left here behind. But price took this high here, boom, traded up. We already had, whoops, whoops. We already had price come back to basically mitigate that area. So we already have price, straight into the imbalance that was left. So price push up, boom. This was the imbalance here. All right. Price traded right back down into it, boom. And then we back up again. Okay. No. All right. So we got price push up, boom. So we still, now you got in on that trade, for example, that was still like a good 160 pip move up. All right. So let's see where we at. All right. And we break again. All right. So you see this trend pretty strong. All right. Not pretty. This trend is very strong. All right. We break the high again. All right. And but again, like bull moments, anything like going on, anything like, oh yeah, this making sense now. So okay, cool. Got it. All right. So you're looking for imbalance once again. Here we got like a small area imbalance right here. Boom. Right. This had traded up, traded back down already. So literally me to get that area. Right. And then we have like a bigger area here of imbalance. All right. Where is the price up here? All right. Let me see. Everybody's saying. Getting it. Okay, let me start like both be going on. All right, perfect. All right. So that big area of imbalance here. Okay. All right, let's see how this goes. Because the look here, like that would have been like a small quote unquote pullback, first push up again. A lot more like a liquidity sweep, but let me see how it goes. All right. All right, so you see here, we got this price cap creating these heights, right? Bam, bam, bam. So we keep breaking structure basically and going up, 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 up. All right. Filling in imbalance, up, up, up. And at this point, so this is where now I would say, all right, if price breaks here, we could trade down into like these lower areas of imbalance, right? But then remember we also looking for changes of character and breaks of structure. So if we get a change of character here, right? Just I don't know, so I just saying, right? The way that price being trading up, right? Like so it doesn't look nice and smooth at how this looks. That we got this, choppiness going up here, small pullbacks, push ups, big pullback here. If price breaks here, all right, if price breaks here, for example, then we get that change of character. So the first indication that we could possibly reverse, right? So we'll be looking for that first, and then we will flip it now and start to look for the cells, right? The imbalance for the cells and so forth until, like we get back into a place where, we are buying again. All right. But that's, in the event that we do break this area here. All right. So let's see. All right. So we got price break the area, trade into the same zone. All right. So one, all right, there's a potential change of character here, right? But we did trade into the imbalance that was left. So if price does not go ahead and break this high, then we know we could potentially come down some more. Okay. We know we could potentially come down some more. So remember, you're just keeping perspective as it relates to, or rather probability as it relates to trading. So we got to change the character at this point. All right. Yes, we traded into this area. So it's like if price does not create a new high, we coming down for a little bit. All right. Coming down for a bit. So let's see where we go. All right. So we actually, that was a down, right? That was a down move here. All right. This was a down move here. Again, overall, still bullish. All right. Overall, we're still bullish. So that was a change of character. Boom. First move. Boom. Down again. Price didn't break this low that we had. Yeah, still. So we haven't like broken structure. All right, this is like another change of character here. All right, where price came down, from another change of character at this point, but we have a broken structure. Everybody understands that, all right? Everybody got that? We haven't broken structures yet. Price didn't take the low. When price takes the low, then we break structure. Price just, takes these quote unquote internal lows, then it just changes the character really and truly. All right. Correct. It hasn't broken the last major low. All right. All these are just minor lows. There's a minor low. There's a minor low here. Right. Until price breaks here, then we can see for sure we're in a downtrend. But currently we're still in an uptrend. All right. Like if we wanted to get a sell at that point, like we could have, right, here, as price came up, did not, like I said, did not take the high. Right. You could have got, probably on a smaller time frame, some type of entry here to sell. All right, and that would have still been a pretty decent move. Okay, but let me know, like, I just want to know, are you guys following me or no? No, you following me or no? Okay, cool. Definitely thought that last part. Okay, good stuff. All right, cool. All right, so once again, all right, we're gonna just keep going through it. Like so you pick it up. The more you see it, the more it becomes the easier it becomes to basically do, right? And that's how you want to start like practicing on the chart. You just start identifying the imbalance, like that area you see like where price could potentially go to, and then we start to clean it up. In terms of the entries, like we're getting more specific with incorporating everything else. All right. So here, all right, so we got price, again, working internal structure. So here it is again, it's a change of character. All right. So change of character validates. Remember, it gives you a reason to also look at areas of imbalance. All right. So price pushed up. Boom. Right. We left. This was the only imbalance here. All right. And it traded back into it already. All right. But it was the only area of imbalance here. All right. Boom. Market wasn't traded balance. Yeah, right here. Boom. Price traded down. Blah, blah, blah. Price pushed up. Like it was traded evenly going up here. But this was your only area of imbalance right here. Price traded back into it. Bam. Stop loss below. And you get to go still. All right. So that's another entry that you could have got in the market. So that was your change of character here. Remember, it's either change of character or break a structure. All right, so this was your change of character. All right, we're still in the uptrend. I mean, still in the uptrend. So the buy side, have we broken? Nah. So we haven't broken the highest yet. All right. Haven't broken the highest yet. See, in this point. And just something to take note of. If you can't find if the direction isn't clear, like the current direction isn't clear, don't trade it. I mean, so at this point, I won't be taking no entries. I need to see something. Like we are neither uh buying or selling at this point. Right? If you look at it, like we're ranging here. All right, we're ranging no. Yeah, if you look at it, so this is where somebody's gotta take a step back. Like when we ain't seeing no highs broken or no lows broken, we can look and see, all right, look, this is what's going on right here. Price in a range. All right. The market hasn't, like give us highs or lows and so forth yet. Like we inside of this box right now, basically. Right? We're not trending. No clear direction. As soon as you don't have a clear direction, that means don't take the trade. Unless you could trade in a range, right? Like me personally, I like trading in ranges, especially with gold, because it's easy. Right? Like, when I go to the top and come back to the bottom. When I come back to the bottom and go to the top. And it's just simple with gold. Right? Everybody else is one trick. But yeah, so this is where you at, right? So as much as possible, you try not to get lost, you just hold off, all right, and let it take a high or a low. Bam, took the high. That's all we want. Right? Let something happen. We took the high. So again, what is this? Let me ask you guys know in chat. What's this? First took the high. What is this now? Before we just had change the character. What is this now? First took the high. BOS. All right. Break of structure. Definitely need to get more repeats. Yeah, for sure. All right. So this is a break of structure. All right. Boom. First came up for the high. All right. Same thing again. Imbalance. Boom. All right. All this is the area of imbalance. All right. All this is the area of imbalance. The order block, etc. lower. All right. So let's see. Press straight into it. All right. And we actually took a low. All right. So we see price straight into it, pushed up. I mean, really and truly, this would have still been like a really good, like if we had something in here, let me see, if we had something in here, all right, you still get quite a bit of pips off of this. That was like 170 pips up. If we took an entry from here, like you would get clap. All right, we took a stop loss on this. Still about 80 pip move, so not too bad still. All right, stop loss below the low. Yeah, probably would have got your stop hit at this point. All right. So remember, imperfect, right? And this is this would be like the first probably potential loss. All right. Now, if this is the low, okay, this is the low. All right, we want to see price break that low. All right, we got like a change of character at this point. All right, but let's see. All right, let's see. So we're looking for imbalance. No imbalance visible here. Well, yeah, so we could look in this area right here. Yeah, that's you can see. All right, so we can see what happens if price respects that. Boom, we could then come lower. All right. All right, so we got it. So price traded right into it. See here, bam, and then we got that break of structure. Bam, price traded right down. All right. Then once again, I hope everybody following. All right, because it happened a little fast. All right, but you can see. All right. Then price drop lower. Then here we have the only imbalance would have been this area right here, here, between here and here. That's your imbalance. All right. So again, same thing, repeat itself. Stop probably above that high, right? And you would have taken and further, you could take a further sell down from here. All right. Price push down, not. All right. So you got the push down again, right? Didn't go ahead and take the low though. And then we got price jump up much higher up here, right? Really and truly at this point, again, just another change of character. All right, just another change of character. Price would need to break back above this to be considered a break of structure. So at this point, you know, still looking, yes, the perspective should still be sells because price broke structure down here. Okay, price broke structure down here, we're still within this area. Okay. So we had to push up, trade it back into here. So I would wait. All right, I will wait. See if price breaks here, or price breaks here. Price breaks here, then we continue to sell it. All right, we do the same thing. We look for imbalance, and then bam, we look for sell. All right, good. So we got that. All right, price broke it. You guys see how simple it could be though? All right, let's see if we are correct though. All right, imbalance here created. Boom. All right, and we should sell further down. All right, we should sell further down at this point. And there we go. All right. I mean, like, see how simple it could be. Sometimes they feel like, bro, like, why it's so easy? Like when you do, when you doing it like this so often, it feels real easy because you just catch a rhythm, right? And you just realize you be seeing the same thing happening over and over and over, and it becomes that's where it becomes simple now when you're following like one pair, right? Because then you're just able to track what's going on. So you see that we're looking at Seth just said it, market structure. Market structure. That's all that's happening right now. We're just looking at market structure. The price break, the price give us a change of character, the price give us a break of structure. We look for the break of structure, we look for the imbalance, bam, we grab the entries. All right. So we got here again, that was the next imbalance, boom, price traded right into it, and then drop. So we got another break of structure. All right. Price had pushed down here, pull back up. We didn't have any imbalance there, and it continued to drop. So we're doing the same thing again here. Look for imbalance. And remember, we're looking in premium prices. Okay. So like here, imbalance. We also have imbalance around here. All right. So those are the two areas of imbalance that we have. Yep. So we know same thing again. We're just looking for price to trade back up and drop again. All right. You see how it goes because we want to see price take this low here. Okay. We want to see price take this low because no, this is where again, this is where you always remember now where you're at in the market. All right. Remember, price broke structure here. All right. We broke, this was your break of structure. So market kept going back up. We didn't break structure further as yet. So we want to see this. All right. So let me just highlight it. Now, green is breaks the structure. All right. We want to see price now break the structure. Price don't break the structure. Then, you know, that's when we got to evaluate where we at. All right. So we need to see price break the structure. All right. All right. Good. We broke structure. Phenomenal. All right. So we know we're still continuing. We're still continuing down. And if we're looking at it, okay, at this point, this is where we'll like step out to see where we are at. All right, see where we're at. Uptrends. This was the low. Remember this low here? All right, price came up. This was our higher low here. All right, price came up. Boom. All right, so that's how we would know, you know, like every time here, break here, right, cool here. So it's a higher low as well. All right. So that's how you would know once we continuing going down. Once we keep breaking these, what was considered to be higher lows before, we keep breaking them, like we know that are good. You know, we're making a shift. All right, so we brought here, we brought this structure here. All right, we'll put that back in. So this is your breaker structure. Wow. And then we do the same thing. We're looking for areas of imbalance. So imbalance, we know those areas there were areas of imbalance. And we have right here, that small area there of imbalance. All right. So if you have like a pulling a sell on this here, stop loss right above here. If that doesn't work out, then we look higher up here. All right. Actually, let's see. All right, because we got this entire move down. All right, like price just been going down, so that you could use like the fib, for example, at this point. And we see we're looking at the areas, right, that are premium price. All right. So price gives us a big pullback. We're looking at these two areas here of imbalance rather than this one right here. All right. Let's see what happens. And it pushed off of this one. All right. And I will take it then that is because this is where price brought the structure from. All right. And also, this is how you reinforce things in your mind. All right. So you see, okay, you know, like this is why price didn't trade back up here. Because like we were saying earlier, you know, this could be price push down here, pull back up, and then bam. All right. Broke our structure at this point. All right. So we could take the imbalance, you know, from this particular area here, and we see how price traded into it, and then continue to push down. All right. Into all those areas prior. All right. So it making sense? I don't want to lose anybody. I'm making sense. Let's see. Yeah. Good. Perfect. You see, we just study market structure, you know what I mean? Go over market structure all the time. And then once you can identify those areas of imbalance, right, it becomes very simple to grab entries in the market. All right. So for the last 15 minutes, what we can do, right? We can just tap back, you know, and see like if there were any areas, no, that we could have got like a better entry, you know, just based off entering off a smaller time frame. So here on the hour, let's see if, for example, we took, you know, this to the 15-minute, what we have found, you know, entries much earlier, you know, something much cleaner, reduce our stop loss, that kind of stuff. All right. So I'll give you guys insight as well as to how like I look at the markets, even like going back over like strategy and so forth to like clean up stuff. All right. This is how I go over it, you know, 1 hour time frame, bam, and I drop the time frames, come down to 5 minutes, where would I have taken an entry, all right, on this, all right? So like this, for example, nothing, right? You would have nothing in here to take an entry off of because there's nothing literally here. It's just, you know, you would just have to catch this, you know what I mean? Like there's nothing here, right, actually. Right, versus pull back into the area of imbalance, you know, and then push. We had nothing here to trade this off of, right? It's being honest, all right? If you catch that buy, that was luck, all right? You were just very lucky at that point, all right? Here, we got area of entry, all right? So we had a 1 hour time frame, no, price push up, right? We'd be able to say, okay, well, great. This was our area of imbalance, all right? Here, boom, and you could get an entry on this right here, right? So then this is what that would look like. You have got an entry, let's say you did the top of it, right? And you can draw your stop just below a 40 pip stop. That's not bad at all. And you can target highs, right? So you know these highs, at least 62 pips, boom, right? And if you went higher, right? So you know at least you get 62 pip on that, and then higher, ISO 1 to 2, right? Or 1 to 3. All right, you can target, I would say more target 1 to 3s. you had a 140 pip move on this particular trade. All right, so that's one. Now, two, we know that this here was another area of imbalance. All right, so when we look at this now, all right, we're looking at this area as our imbalance. More likely than not, we would have, on a 15-minute perspective, this would have been your imbalance here. All right. And you could write this down. If you have imbalance that overlaps on time frames, all right? So like this, for example, 15-minute, 1 hour, it's more likely going to tap into that particular area and go. All right. You got 1 hour imbalance that ends literally here. And that's this 15-minute imbalance that is literally here. We look at it, what happens? All right, we see price straight up. All right, we get price push up, boom, boom, and then push. Yeah, then push back up. All right, you can see that. So if you got imbalance that overlaps, right, 1 hour, 4 hour, 15-minute time frame, you see that, that becomes a pretty decent area of entry as well. All right. All right, then we have price push up, boom, here again. All right, our price push up again. And did it, here was very broad structure, boom. And yeah, I wouldn't have got an entry on this. Yeah, I would have actually. So here, so smaller time frame perspective, because we have price again, just kept breaking structure going up, right? Smaller time frames, we had more breaks, right? This would have been considered to be a break as well. Like obviously, if you wouldn't have seen this on that time frame, right? This would have been considered to be a break of structure. All right, first would have pushed up, bam. All right, and balance would have been created in here. All right. You would have, you'd probably get a clap on this, all right? I mean, a stop loss for sure. All right. If you traded into this area, that wouldn't be smart though at all, in my opinion. All right, like yeah, we got way too much imbalance down here to try to grab this right here. All right, way too much. Nonetheless, let's see, we're just going through it. All right, just going through it. We have price come all the way back down into it here. Again, I wouldn't have had. I'd probably would have had to trade something off the 5-minute time frame on this wick. All right, but other than that, there's no other reason to buy this here. All right, I wouldn't have had a reason, to be honest. All right, on the smaller time frame, besides this imbalance. All right, then we had the breaks, boom, all the imbalance. Definitely wouldn't have taken that trade. And being quite honest with you guys, like there's nothing here to trade out on, right? And there's no reason why I would have bought that right there, right? No, I would have had to see this retrace much lower, but that stop loss would have been ridiculous. All right. So there's nothing there that would have bought that on. I know some people that would have. All right. Yeah. So in here, once again, imbalance, no imbalance. Here would have been on a smaller time frame. This would have been the only area of imbalance right here. All right. And you can got potential entry on this here. Stop. Come right below that. And again, price pushed up, boom. No imbalance created here. The price traded up pretty evenly. Then you only got the imbalance on the higher time frame perspective, right? And then you drop your stop just below that area. Yep. So you guys capture the point, yeah? So I'll make sure, all right, capture the point, capture what's going on. So we showed you guys these entries of the imbalance, all right, of the imbalance. I'm showing you how they can play out. All right, see something here real quick. I'm gonna go to very present. The trade on gold today. All right, so the trade on gold today. Anybody can tell me, yeah, you guys advanced, you should be able to tell me, all right, why this sell today? Like, why we took this sell? Just looking at this, possible, give me a little explanation. Anybody, somebody, this was a trade. Nobody?
No, zoom out there just a little bit there, bro.
How?
Zoom out just a little bit.
I can't hear you.
Zoom out just a little bit.
Yeah, okay.
All right. Based on what I seen so far, you got a big impulse move to the downside. Yeah, the market was going back up, but it didn't break the last high there, and it continued making lower lows and lower highs.
Oh, yeah. Let me know where you at. That's a date.
Huh?
I mean, in your explanation, I just want to know where you at. Like, you hear, where you at?
All right. You see the impulse moves to the downside, it created that low, then it went
There.
up right there, without high
Uh,
there.
uh,
Right. Right. So from there now, the market was creating lower lows, lower highs, and it didn't break the previous high there.
right.
Uh,
I mean, that's it.
right.
And the only other thing to add, it would just be like, because I actually took this trade off the 1 minute time frame, right? So
Uh,
if you look now, for example, say we come down, we start to break down the time frames, right? Like if you look here, you see how price just give us, you see that wick, and then trade right back in.
mhm.
So this now is just a liquidity grab, all right? So the money sitting here, the money I just sitting at this point here, all right? Price just push up, boom, grab that money, and then we get a significant push down as well. So that was the indication that, all right, yeah. Now, because anytime you see like liquidity grabs like that, market will definitely go the other direction, right? When we get price just wick in a particular direction, we're gonna see, market should push, the opposite direction, especially in a case like this where, it's at equal highs. So we had like all these equal highs forming, high here, high here, high here. Then this candle, boom, push up, grab the money, then push down, right? And then we basically even, um, just confirm the entry really and truly trading below this low, pull back up, I drop. So
So
it's just,
Kai, based on what you were saying just now, how do you know after you see the wick happen and the grab took place, just where the white line is, anywhere in there you would take the trade, or just
no. So the entry literally on this trade, the entry was literally like around this area than where
okay,
area, right?
okay,
Because that's the first indication is like how we get like a change of character, quote unquote, as well. It's like the
right,
first indication is that all right, price just grab this money here, all right. So now we want to see what's gonna happen, all right. So it's like we want to see, right? Is like if this was our, it's like if this was our, rather here, is like if this was our lower, higher low, all right. Then the market was trading up. Because remember, just on let me come down. So this was taken on a like a 1 minute perspective, right? Like entry, like tight, right? So if this, for example, was the quote unquote lower low, right? Higher low, sorry, right? And price traded up, boom, all this was, we could see here, this was just hold up, all these just equal highs, all right? So we see market just keep bouncing off here, bouncing off here, bouncing off here. That run right through and trade right back in. There's going no other directions besides down at this point. Because if we wanted to continue up, like we got that break, like we don't got a reason to trade right back in. All right. So we would have seen price break, if anything, and then like give us more candles going up. All right. But price traded right back in, which gives us that indication though that all right, we looking to push down. So if this was our higher low, and then this became our quote unquote high. This was then of course our next higher low. Following? All right, so it's like here, all right, bam, here, this created now the high, quote unquote. And this was your higher low. Price came down, brought this. So now it's like, all right, great. All right, first brought that. From here is sell. All right. Because no, we got that change, we got that quote unquote now 1 minute break of structure. Like the only direction this should really go is down from here. All right. And that's where we set up the entry came from. Now the real move or the big move was really and truly the buys. Like these buys back up. All right. My expectation for gold is to go to about 3,000. All right. And that's like far. All right. Expectation for me is for gold to go to 3,000. The real move or the better move was on the buys, but like I'll wait too long for that to happen. That trade and they gone. All right. So you see how price top in here. All right, price traded right back down into this area after all the buys and so forth, fill all the imbalance that was left. And now we push up. So we might get like another entry on this maybe tomorrow, right? Early tomorrow. We do the same thing that we were looking at just now. All right. We look for the imbalance that's created. And once you get the imbalance, there is an imbalance. So we got like here, for example, imbalance, this imbalance, all right? Bottom here, areas of imbalance. So we have no pullbacks, right? So we could do literally what, we were saying in terms of that where price should, come back to. If this is the high created, we want to trade under the 50%. So under here into this area, is where we want to look for those entries. All right. So we could literally peek here, here, and then like drop an alert on it. Hopefully price don't just play. So like even this area here, like I wouldn't really let me see something. The only reason that looking at this again, like I would consider this area here is because price push up right here until this height. All right. First push up here to this height, that's the only reason I will potentially even look like this. Like that price may not, trade back down into these lower areas. Preferably, I want to see it come back down here for sure. But, we'll see. We'll see. But, yeah, guys, I just want to be sure to understand how the imbalance and so forth works, how you can utilize it, how it basically, just makes your journey a lot simpler. I hope it, like I said, send off some light bulbs in your head. All right. And just practice it with everything else that you could literally start from that place. Literally start from, and that's what we do anyway. Identify the imbalance. Like, where's the imbalance? Is there any imbalance? Identify that imbalance. All right. Then you start to look at things like supply and demand zones and so on and so forth. So we're gonna look at that. Then we're gonna look at everything separate again, and then just bring it back together again. All right. So it's just showing you again like different ways to enter the market. So you can see imbalance is one way that I can enter. Next way might be the order blocks. Next way, might be off like a supplier demand zone. Like next way might give me like a liquidity sweep, which should be like the one I just showed you guys just now. Like we got a number of different ways that you can enter. All right. So, yeah, man, that's it. Kurt, you miss it.
Yeah, way. I come for the credits.
Cover the credits, bro. But yeah, man, that is it.